The top 100 agents are the best of the best, listing and selling more than any other agent in Australia.
Sold. Congratulations, sir. Well bought.
These are the practices, actions and beliefs of the most successful agents in Australian real estate. Raw, honest and completely uncut. Welcome to REB's Secrets of the Top 100 Agents.
Well, good day everyone, it's Liam Garman here and Emilie Lauer, the team behind Real Estate Business, Smart Property Investment and the First Property Buyer Show. Emilie, we do a lot.
Yeah.
We do a lot. We cover a lot.
We do cover a lot. We've got a fantastic team that helps us cover a lot. I think we write about, 8 pieces a day.
8 pieces a day,
At
a lot
least.
of podcasts, a lot of events. Next year's going to be a
massive
big year for events. We've got some of our first, I'll soft launch it now maybe, some events coming up for SPI. We've got property management events. We've got innovation events coming up in the world of real estate. So it's going to be a big 12 months ahead, which is exactly what we're talking about today, which is how to set yourself up for success in property investing in 2026. Now, in the last ep, we unpacked some of the market fundamentals. I don't think the fundamentals is going to necessarily change. Maybe some interest rate hikes on the horizon, but notwithstanding that, the economic fundamentals remain the same. We've got thousands of new buyers coming in through the 5% deposit scheme. We're going to have about 10,000 buyers a year coming in through the shared equity scheme. So a lot of new liquidity coming into the market.
And not enough homes.
And not enough homes and more people.
And more people.
So it's going to be I think it's fair to say, and you did temper me on this in the last episode, we won't necessarily see the growth we've had in the past.
No.
But still growth on the horizon.
Yeah. Look, growth is still going to happen, but a bit more moderately. I think what we're going to see is buyers in 2026 being a bit more strategic. We're going to see them being a little bit more price sensitive. And we're going to also see them, very much looking into either they're going to go PPOR or reinvesting. I think the strategy is going to be a key words for 2026 because people don't only want to enter the market. I think people are starting to shift and see the wealth attached to property. Which also, before we dive into, what the property market will look like in 2026, I spoke to one of our fantastic buyer's agent that came on this SPI show before, and he gave me a lot of good insight on how to use the holidays to review strategically your portfolio without the mad stress.
Yep.
So we know that December and January, the summer, market is slow.
100%.
The summer market is slow. There's auctions are going down. The number of supply is even lower than the usual. People on a holiday. If they didn't sell before Christmas, it can wait after, Australia Day, basically. So I think, taking this time to review your portfolio is going to be, very good timing-wise, and it's going to set you up for a successful 2026. So, review the cash flow, review how much property are costing you, rental income, property expenses, equity position. Have a look through the podcast. Have a look through the hotspots that you had selected. See if they still match your strategy. See if this sticks with your non-negotiable. Have a look at how everything's working and how everything is performing, and take some hard decision before, you're going to buy your next one. See if you need to sell properties. See if, you're going over your budget. Be a little bit stricter with yourself and have some goals for your 2026, portfolio performances. I think that's it's quite an interesting, timing, because you can really sit down and have a look at this. Don't spend the whole day. Review, do a 10 or 15 minutes or even 20 if you want to be a little bit longer every day for a couple of days, and then unwind. Don't spend 3 hours on it. You've got time with family.
I do like your point about reviewing the hotspots that you identified, because I think it's fair to say what was a hotspot 12 months ago might not be.
No.
Well, it might be super hot, but, are you going to be buying into a market which has already jumped 10, 15, 20% in a year?
Yeah.
Is it's still like a lot of investors might be talking about it, but is it still the right time? And that is a risk that a lot of people have in this industry, which is it's almost, what's that the cab driver adage where it's like once the cabbie starts telling you to invest in something, that's time to sell. And we hear it all the time from our investors that we speak to, which is, everyone's talking about this particular postcode, it's time to buy. If everyone's talking about it,
Yeah, it's too late.
it's too late because the investor money's already come in, the smart money's already come in. So I do appreciate your point, which is go back to basics. Those hotspots you identify that you might not have had the chance to buy into this year, reassess them, analyze the vacancy rates, analyze the rental trends, review the infrastructure. Is it coming through? Have you missed out? And that's fine. Everyone misses out. It is par for the course.
And look, if you missed out in one hotspot, the next one is waiting
There's
for you.
always another one. Yeah.
Now, I kind of want to point here that you got to be careful with those hotspots.
Yeah.
And you got to be very mindful of which buyer agent you are hiring to help you buy your next property. So we had a report a couple of weeks ago, coming up with a very well-known property professional that is warning against some of the lazy buyers agents that are using ChatGPT to find their hotspots. Because ChatGPT has shown in a report that is giving basically the wrong information, favoring units, oversupplied suburbs, and at times suburbs that did not even exist.
Really?
Yeah. So be really aware, do your due diligence, not only on the property you're buying, but also on the buyer's agent you're hiring. Because we know that there are plenty of buyer's agents there. We know the good ones, but there are plenty of people that are just entering the game and don't know what they're talking about.
I've had BAs sort of actually give me, this is what ChatGPT said, and they didn't even try and cover it up.
God.
They would put stuff through Chat and to boil it down. It's like, I'm paying you for expertise. Your expertise, not I could have done this.
I could have done that.
But then there's also the argument that we were talking about before about with the risk of hotspot chasing, because there is a huge risk to it, which is if your BA is relying on ChatGPT to identify hotspots, to identify asset classes, areas in a location. What ChatGPT does is it mines publicly available information. So with that publicly available information, it's the exact same thing we were talking about before. If everyone on the internet is talking about a specific postcode, it is done. It is already been bought into.
Yeah.
It's already elevated. Everyone's already gone into it, which is one of the risks of hotspot chasing. And not to mention, with hotspot chasing, there is the risk that there is a downside. If you have very active investors that are, and I personally would fall into this category. I'm not a buy and hold kind of person. I'm very happy to sell. If you're in an area where you have people that are very happy to sell and they've got their, 20% equity uplift over 2 years, 30%, 40%, if you look at Perth and some of those areas, 30% year on year, you also run the risk of a big exodus at some point. And with the hotspot chasing, also just, and I'm a big fan of buying regional areas. Regional areas have had a big uplift. Sometimes, and I've seen it, people being given very regional areas, like super regional, one-horse towns that are over-reliant on a single industry. And I think a lot of Australians, a lot of us can cast our minds back to 2008 where there were a lot of these areas that bottomed out once the mine closed, for example, and you're left with no rental income. You paid overinflated prices because you were chasing yields, which is totally fine. But that is the inherent risk of hotspot chasing. Always good to temper it with safer assets.
Yeah.
You have to diversify your portfolio.
And I think diversity and diversification is going to be huge next year, especially because more and more people will start looking at commercial assets. So commercial started, I would say second part of 2025, commercial assets started to be a little bit more talked about. And I think 2026, we will see more and more people starting to diversify throughout commercial. So I think that's going to be a very interesting year for that.
Yeah. And I know this is something that you're very big on, which is don't be emotional. Don't be emotional, especially throughout the Christmas period where these boundaries that we set on ourselves are artificial. And I had a fantastic podcast with the Finance Specialist podcast. I do some mortgage broking podcasts. And on the broking end as well, where it was fantastic advice, which is the 2025-2026 January 1 deadline, it's artificial. Now, there are arguments that you have to get things done before June 30 for the financial year. That's a real deadline for us.
That's a real deadline.
That's a real deadline for us. One risk that a lot of investors have is they set these artificial boundaries of, I need to get this in 2025. Do not fall into that trap. For brokers, don't worry about it. For BAs, have a very frank conversation with your clients that it won't necessarily come on this side of the year. And as a buyer, don't just get something because it's this side of the year. Make sure that you're not emotionally buying just for the sake of buying.
100%. And you got to look at the assets. Because if you've got a seller that is very pushing to get stuff done this side of the year, what's the reason? What is the reason? Is it because they really needed the money to buy their own property? And in that case, sure, why not?
Yeah.
But why are they selling?
What's the motivation?
Exactly.
Yeah.
What's the hidden stuff? Because there's always something going on. But I think it's going to be a very interesting year. But do not be emotional, especially if you are investing. If you're going PPR, very different. Yeah. If you're buying your forever home or the house you're going to live in, the unit you're going to live in, yes, be a bit more emotional. That's fine. It's going to be yours. If you're going as an investor,
cold hard facts.
Yeah.
Cold hard facts.
Just the data.
Now, one thing that you're very big into is goal setting.
Yes.
And I actually did my first goal setting at the beginning of this year where, and it's hard. It is actually really challenging. My wife and I, we went out to a cafe, got the notebook out, we sat down, and it is so strong. It is so strong because so many people in Australia, we see almost, maybe sometimes we see property as a cheat code. And I think it's fair to say that even a lot of our listeners would have used property as a cheat code because you had investment properties gone up. But that is not what the smart investors do. You have to constantly reframe, analyze the position you're in, which is what you highlighted before. And the goal setting with your spouse or your partner, or even if you're doing it yourself, it actually adds, it can be some uncomfortable conversations where you
100%.
Go through spending, you go through the asset. Should we still hold it? Should we sell? And it is hard because it brings to light differences in strategy. It brings to light differences in opinion, but you have to do it. Do allocate the hour to go through it, set what you want to achieve for the year, and you have to constantly review. You have to constantly stick to it. When we did a review partway through the year on our goals, again, challenging conversation because you look at it and you're like, well, we didn't do any of this. We haven't achieved any of it. And it does bring to light some differences, but you have to have that North Star and constantly go back to it.
So now by the end of the year, are you happy with your goal? Did you get...
We're one house down from where we wanted to be. We're one house down, but we did have... Our goal is 2 properties a year. So that's our goal. Our goal is 2 properties a year. But we're in the market for a second one this year, which will, but we're also very cognizant that, to your point earlier, what we were discussing earlier about the emotion. Yeah. We're happy to take a little bit longer to make sure that we're not buying for the sake of buying this side of the year. So we are super happy to wait and push that through to next year. But the goal is 2 properties a year. Fell just short of it. Probably early next year we pick up the second one.
Which I think is fine. I think, goals are here for a reason. But I think, you shouldn't be, they are manageable. They are flexible. So, if it's not this year, it's going to be early next year and it still counts as a win.
Yeah.
I think, some people see the goals are a bit too strict and that's, a danger as well because you don't want to put yourself down because you couldn't achieve something. At times, buying properties can be outside of your control. It depends on borrowing power. It depends on RBAs. It depends on whether or not you're going to get a raise at work. It depends on so many things. Always keep a buffer. My favorite advice. And this one, I'll give it as an advice. Keep the buffer.
I'm so bad with it. I go right down to zero. It is so dumb.
Well, you never had to change your hot water tank. That's why.
It is so dumb. I know what you're saying.
I know.
And you are so correct. I am so bad with going down to zero.
I'm a bit more conservative, I think, than you in that sense.
Yeah.
Like, I'm always scared. Like, I don't know why. I'm always scared to run out of money.
Yeah.
It's not scared, but I'm like, if something happens, I am going to have to tap into my savings and I don't want to.
Yeah.
That's my point. Like, my goal for next year, and I talked to Chris about it this morning, is because we have so many spending coming up next year because we just got engaged. So we're gonna have to do one of the weddings and then the second one in France, which is gonna be
that's
so
right.
expensive.
You got multiple weddings.
Hey, that's international travelers for you.
Yeah.
The beauty of it.
The beauty. Yeah.
The
that's
beauty
a
of
good way
it.
looking at it. Yeah. The deposits.
The deposits. Yeah. So I want to, like I said, next year. And the reason why is also we had a report come through that basically property prices within the next 2 years will increase by 100K.
Yeah.
So before that increase come in, I just want to snap another one, if that makes sense.
Yeah.
So I'm not on 2 a year. If I can get the next one next year, that would be so... That would be a blast.
But that's the
that would be a blast.
Reasoned investor.
Yeah,
that is the wise investor. Also, that I think that there is an argument as well. The 2 a year does lead to that emotional just hotspot chasing. It can be a risk. It can be a risk. You see it a lot as well with a lot of the financial advice that comes out of people in the property industry that should not be giving financial advice
100%.
illegally. I've heard thousands of stories of people getting online valuations done, coming way, way over the top. Properties that are just really by banks overvalued and people borrowing against it to just buy and buy and buy, which is fine provided Yeah. If you know what you're getting into, if you look at your asset. And this is another problem that you see cognitively that a lot of people have is that they inherently overvalue the asset they have. I think a lot of agents that would be listening to this would know, when you're selling a PPOR, that people have that emotional investment,
100%.
Emotional attachment, and that adds 100K to the selling price. And that does not exist. When you do the evals, that comes in over it's a fine strategy, provided that sometimes the bank can overvalue the place. So you're not stuck in negative equity should you have to sell. But I do see a lot of investors genuinely believe it.
But you know what? I think it's interesting. So there's another SPI pod that Phil did with Lachlan Vidler.
Yep.
And they explained why sometimes having that big, massive portfolio is not a solution.
Yep.
Sometimes it's better to have a smaller portfolio that is ultra performing and performing really, really well, rather than having a massive portfolio that is not giving you the return you deserve.
Yeah.
So again, it's all about strategy. It's all about how comfortable you are in being in debt, because that's the point of it. You're in debt, So all of this needs to be taken into consideration when you are setting your goals, when you are looking at what's coming next for you. And you know what? I'm going to add one, and that's something I want to try this year. It's a vision board. I don't know if you've heard of it.
You could do a vision board.
I think so, because apparently setting goals is good, but the vision board is actually like making it happen even more, if that makes sense, because you are...
How do you do a vision board?
Well, like just the old school way. Either you print pictures and you pin it, but I think I'm going to go for the digital way, Canva.
That's cool.
Like just do it like this and like use this as either as a screensaver on my computer and just like see it every day. Because when you see this every day, it's more likely to happen, manifesting and all of that stuff. Look, I've never tried it. That's going to be my try hard for 2026. By next year, December next year, we'll see if it worked or not.
Yeah, we don't do a vision board, but we do magnets of the photos of the properties
Ooh,
that we buy.
interesting.
So they go in the fridge. And you put a new magnet with the photo of it, which is pretty fun. Now, you did a podcast, and this is for people primarily that work in real estate, but I think it's pretty relevant to our more active investors as well. With the Rise initiative recently,
Yes.
with Kylie, absolutely fantastic initiative, supporting real estate agents, selling agents, and they do a great job because the selling agents, you're constantly on. You're constantly getting phone calls, and BAs would be the same, brokers would be the same. Property managers. It is a hard job, and it is a thankless job. What are some of those actionable takeaways that you got from that podcast about how people can rejuvenate, keep their well-being up over the Christmas period?
Yeah, and look, I think one of the things that Kaylee said was next year, 2026, well-being shouldn't be a bullet point.
Yep.
Well-being should be I don't want to say a way of life because that's a little bit maybe too much, but should be something very active. And it can be done by very easy, actionable daily task in a way. Go for a walk, unwind, put some music in your listeners, just be with yourself, spend time with your family, go to the beach, do a little meditation, 5 minutes meditation session, stop the screens, before going to bed, read a book, breathe, and all of those little things that seems so natural that we often forget because we are so busy.
Yeah.
You're consumed by work, you're consumed by, your goals, finding the next properties, you're consumed with your mortgage, the stress associated with it, your finances. Like a lot of property investors also build wealth for retirement. So, you're consumed by all of these future things that will happen that you forget the moment.
Yeah.
If that makes sense. So it's basically, Kylie said, like, you gotta have to refocus and recenter on the moment. And we know it's not only, the Rise initiative is usually for property professionals, but we know that the stress of buying a house or a home or a unit or whatever you want to say and selling one is crazy as well, because when you're buying, you're there every weekend. Either if you're doing PPR, you're visiting stuff every weekend, and it's 5-6 properties per Saturday, and you compete with other people, and you project yourself, and you're trying to not have that emotion, but we know the emotion is there. And then if you're going as an investor, it is all about finding the right buyer's agent, talking to your team, making a decision on a property you've never seen.
Yeah.
So the stress is there. When you're selling the same, you got to make sure the property is fixed. You're attached to the property. You need to buy something else. It's a lot of stress also for buyers and sellers. And so the whole property world has that stress and needs to go back and enjoy the moments and think about their well-being and do just those little actionable tasks every single day. Take just 10 minutes. What is 10 minutes at the end of the day? But you have to take it for you.
Yeah.
And it needs to be a routine. And it's so easy to go over. Like so easy to just, I'll do it tomorrow. But then tomorrow is like, I'll do it next week. And then I'll do it next month. And then you arrive in December and it's like, I'll start next year. So, yeah.
Yeah, and I couldn't agree more. Even my own reflection with that, you have to diarize it, you have to calendarize it, you have to put it in, you have to mandate it.
Well, we mandate the gym, you and I.
We
have to put in our calendar our gym session, otherwise we just not go.
Yeah, you have to do it. I feel like even for investors, it's very similar because looking back, I don't even feel satisfaction with it, and there's always something more. You still feel so underachieving. So you sign a new contract, and it's just you don't feel a level of satisfaction, and you do have to take this time to say, actually, you're doing really well.
Yeah,
you're doing really well. It's okay, and you can celebrate your achievements.
Yeah, and I think take a step back, look at what you've achieved, be proud of what you've done. And yes, I think, nowadays we tend to chase the next thrill. Like it's that hit of dopamine that you're looking at. Oh, I'm going to buy something else. I'm going to buy something else. Just, enjoy what you've done. Look at, the portfolio and maybe, it's good to build more and to grow that portfolio, but sometimes it's also good to spend money with friends and family. And maybe, like rethink and delay a little bit that next purchase to enjoy your life because, man, life is short.
100%. Now, I think that is all we have time for today. If you want to get in touch with the team at REB, SPI, First Property Buyer, reach out to myself, Liam.Garman, Garman, over the Christmas period at momentummedia.com.au. We're more than happy to have a chat. But Emilie, great year.
Well, look, same here. If you want to have a chat or if you're looking to buy your first property, head up to First Property Buyer Show. And my email is Emilie, Emilie, not the Y, not the Y, .Lauer, and that's LAUER at momentummedia.com.au.
Fantastic. And to all of our listeners, I hope you enjoy your break. And we'll be back next week. I think we got one week, and we'll be back next week. But until then, bye-bye.